Hi, I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Thank you to this week's sponsor, the National Association of Commercial Loan Brokers. First story, the White House has put out its budget for fiscal year 2019 that runs from October 1st this year through September 30th, 2019. I can't believe we're talking about 2019 already. SBA, Lance Sex and I talked about how we view the SBA proposed budget by the White House. Let's talk about the budget, Lance. They're talking about increasing 7A from $27 billion to $30 billion. And also remember that the administrator has the ability to increase that by 10% if we're looking at a shortfall. And this budget actually says 15%. So that you can conceivably be looking at a what, $34.5 billion,
almost $35 billion.
2019, yeah. 504 numbers are flat. Now they are reducing refi from $7.5 billion down to $1 billion, but no one's using refi that much. In fact, the 504 program, we've been covering it. There's challenges in getting those loans approved right now. It's cyclical. I think that'll rebound as those things do. Now, there are some fees. They're going to increase the guarantee fee by another 25 basis points. I'm not a fan of that, but we want to be at a zero subsidy.
Well, the guarantee fee right now appears, I mean, there's a chart. Paul asked a question the other day. Maybe we have it on, so I'm not going to get too much into detail that tells you the guarantee fee at different loan sizes. You know, right now, let's just take the basic guarantee fee of 3% of the guaranteed portion. That's like a 2.25% fee. And SBA has operated at zero subsidy. What's happening is the overhead of SBA is increasing, and they're trying to find a way to help make a contribution to overhead. The program's proven that the current guarantee fees will keep it at zero subsidy.
But Congress has directed SBA to regulate us more strictly, and that's got to be paid from somewhere. So this is they're increasing a couple of the fees.
And I think a lot of this discussion about how they're going to keep a closer eye on participant lenders, I mean, that service is not free. We had some discussion with the participant lender about the on-site reviews and the price of those. And quite frankly, I think the price is typically higher than it should be. But what I'd like to see, Bob, if they're going to increase the guarantee fee for overhead purposes, maybe reduce the review fees, but that probably won't happen.
We'll see. Again, these are proposals. We don't know how. There's a difference between this is what we want to do and what's going to happen. This is slipped in there. The next fee. Oh, go 2 slides, Joseph. We already talked about increasing Express. Go one more. They're going to increase the secondary market fee. So I don't know what this means. 5 basis points. You have a pool. The pool assembler has to pay that tax. Seems like a mosquito bite. I talked to someone in the secondary market, and they're saying the net effect of that will decrease the premium that you receive by a quarter of a point. So if you get 113, it'll fall to 112.75. Not tragic. Again, it's better than the original proposal, which was lower the split of premium income from 110 to 108. That would have cost all the community banks and credit unions out there who use the secondary market 1 full point. So again, another another fee in there to help pay for oversight of the new organization.
Well, and I don't know that this one will be felt that much. Certainly, there are other I think, quite honestly, Bob, the increase in the guarantee fee is more impactful on SBA lending than this increase on what's sold in the secondary market. You're generating a significant level of non-interest income by selling the guaranteed portion of a SBA loan on the secondary market. You're getting a pretty decent sized check, and they're going to take a small piece of it. Right. But I think the increase in the guarantee fee, and it'd be great to have a poll question. That quite often is the guarantee fee amount is a topic of discussion, especially with better small business borrowers.
Yeah, and I don't know how, again, this is what the White House is proposing. The Small Business Committee has a mind of their own on both the House and Senate side. I don't know if they support this or not. We'll find out shortly. Every week, Lance, Six, and I do a live office hour function, and we answer our questions from our students who are doing our training or from webinars. It's a fun session that we like to do, and we get these great questions. This is a question from April, which is the perfect definition of what the industry is wrestling with credit elsewhere. Listen up. Next slide, please. Go ahead and read this. It's up on our website. The White House is weighing in on credit elsewhere. Lance and I have talked several times of how important Congress is telling the industry we want to make sure these loans are not available conventionally. The White House is also weighing in on this mandate to the industry. And very, very clearly, we want to make sure that these programs are available for people who can't get credit conventionally. So yeah,
this is a concern at SBA. It's a concern in the House. It's a concern in the Senate, and now a concern with the White House. Guys, what does that tell us as participant letter? We better have credit elsewhere documented well on every SBA loan.
We have a great question coming up from April on that, and we'll get into that. Oh, boy, I'm off script, and there it is. Good job, Joseph. In the example in our underwriting training, Lance, we have a case study where we need to take the personal residence to fulfill the collateral requirement of 100%. Her question is, well, wait a minute. I'm taking the collateral, and now I'm at a fully collateralized loan. The cash flow is acceptable. So why is this an SBA loan? That's a great question, Lance. Go ahead.
Well, I think it's because, April, typically an SBA loan is going to allow for a term that exceeds banks' policy, i.e. an equipment loan. Most banks will do 5. I had this discussion with one of our lenders. We were talking about an equipment loan. He said, yeah, we can do 5, but most times we'll do 3 or 4. Right. But with SBA, you can do a 10-year term. On commercial real estate, the same thing's true. I mean, some banks might do 20. Most will do 15. But with SBA, you can do 25. If the small business needs the longer term in order to proper cash flow, that's certainly a way to meet credit elsewhere.
And also, Lance, if we're talking about a 15-year term, there's balloon, there's a calls. It's a demand note. SBA is not on demand. The lender cannot call it for.
Well, and your most common credit elsewhere, whether it's an industry or a life cycle phase of the business, maybe your bank has a policy against doing loans to startups. That's one way to meet credit elsewhere. B, collateral. There's not enough collateral to meet bank policy. Obviously, in this case, there was, but that is a possible credit elsewhere. And C would be the terms and conditions offered on the SBA loan do not meet in-house commercial lending policy, and the small business needs it in order to be successful. That meets credit elsewhere. If you're proving credit elsewhere, those 3 are going to get 99% of the credit elsewhere proof.
Best practice, underwriters should address credit elsewhere in the loan authorization, in the credit memo, and initial it and document it.
Well, and I want to share with everybody that's using SBA One, if you've not printed out the loan detail and credit memo report that's available in the documents section, the nice thing on that is somewhere around page 7, 8, or 9, there is a credit elsewhere section. And when you're going through putting a loan into SBA One, you're going to answer some credit elsewhere questions. I like to print out that loan detail and credit memo report, and I'll go in and add a couple of comments, sign and date as an additional document that helps to prove credit elsewhere.
Where lenders are being criticized is they're not even addressing the credit elsewhere issue, or they're using a standard cut and paste verbiage for every loan.
Yeah.
No lender that I know of has been criticized for addressing credit elsewhere specifically and having SBA second guess that judgment. Is that your understanding, Lance?
That is a perfect explanation of what SBA's hot button is. If they pick up an SBA file and the credit memo does not address credit elsewhere, there's not a memorandum in file somewhere that addresses credit elsewhere, that's where they have significant concern. Or your explanation of credit elsewhere is what Bob said, copied and pasted from loan to loan to loan. Every loan has a different reason for meeting the credit elsewhere requirement. It's like personalizing, and that's why I'm saying the loan and credit memo report out of SBA One, you can go in and add comments and sign and date and individualize each loan's credit elsewhere explanation. But the important thing, guys, is every SBA loan needs to address credit elsewhere somewhere in the SBA loan file. And the best place is the credit memo.
Finally, our last story is a conversation I had with Bill Broydrick. He's a lobbyist representing the Rural Lenders Conference, specifically USDA Business and Industry Loan Program. I'm passionate about this program. I'm passionate about getting capital to rural America. The budget is problematic, and we discussed that. As an aside, we didn't really talk about this, but the Farm Bill is coming up, which is very important for rural Main Street. Listen to what Bill and I discussed. Bill Broydrick, representing the Rural Lenders Roundtable. Bill, the White House put out a budget. What does it mean for the USDA B&I lending programs?
Well, for the second year in a row, the administration has asked the Congress to eliminate the B&I program, which is very bad news. As you probably know, Bob, it generated last year $1.6 billion of lending, which created thousands of jobs throughout rural America. And now the administration is once again trying to eliminate the program.
Bill, you know, I'm a big fan of this program. We have bipartisan support in Congress for SBA, which is new over the last couple of years. Why can't we get that type of support and traction for rural America's main streets?
Well, I think that we have it in Congress. I think the problem lies probably not at the White House, but rather at the Office of Management and Budget. And what they object to are programs that have not a guarantee necessarily, but a subsidy that goes along with it. So one of the things that we hope to do during this session of Congress and the consideration of the fiscal year 2019 budget is begin the process of moving away from any kind of subsidy for the B&I program. And that would probably eliminate the concerns that the OMB has. Now, in order to do that, it will be necessary to increase the fees that are paid either by the lender or the borrower. But given the guaranteed nature of the program and the fact that it has done so much for rural America, hopefully that will change the atmosphere with the administration and with the Office of Management and Budget.
Bill, any idea how much those fee increases would be, what they would look like for both the lender and the borrower?
Well, they would be modest.
Okay.
I can only tell you that for the whole $1.6 billion of lending that the department, Congress, I should say, appropriated approximately $30 million. for the subsidy that was used for the guarantee. And this all revolves around just that very rare case where there's a default and it's not possible to collect in other ways from the borrower, and then the government makes up the difference. Now, the truth is that particularly in certain kinds of B&I loans, there are very rarely defaults, and those defaults are basically in certain sectors like manufacturing and oil and gas. But if you look at many of the mainline B&I programs where they lend money for nursing homes or lend money for hotels, the track record is extremely positive in terms of those loans being good and being creditworthy and never having
absolutely.
A default.
Assisted living does well. There are a lot of number of niches that are important for rural America that this program solves.
The problem is that unless lenders are diligent and are in touch with their members of Congress and with members of the relevant two subcommittees in Congress, that somehow or other in the whole process that this might be eliminated. So we have to be eternally vigilant and lobbying Congress to make sure that the programs are continued.
Oh, absolutely. Well, I applaud you for going to a zero subsidy model. I think that would be great for the program. Then it could have the support that SBA has in Congress and tweaking the type of projects that the program does, because this is much too important of a program for rural America Main Street to let it go by the way. Bill, I appreciate the comments. Talk to you later. Thank you very much.
Thank you. Bye-bye.
Thank you for joining us today for Coleman Report Update and supporting America's and rural America's Main Street, one entrepreneur at a time.